Wow, 5 3/4 lower. We have December at 470.5. Just a tick off our low of the day. We have Oliver Slope with us. Oliver, what's going on?
Well, just a lot of pressure, and I think a lot of this aligns with the seasonality aspect. We know that harvest is going to get a big boost here this week throughout the Midwest, and I think when you get harvest talk, you talk about supply coming online, and you get some selling pressure that comes into things. Now, technically, as you had mentioned, corn breaking down to their lowest level since about September of 2021. So below, that 472 area, we're basically in uncharted territory. So not a lot of technical support, but from a seasonal support standpoint, I think we're getting a little bit closer to eking out a seasonal low. Soybeans, on the other hand, seasonally still see a lot more pressure towards the back half of September into the first week of October. So I'm a little bit more skeptical of the soybean market here, especially breaking below that 200-day moving average this morning. The next stop, psychologically significant, $13 handle. Just above that, the 100-day moving average at 1304.
Okay, 1321.5 is where we are right now. That's down 18 3/4 cents. So a lot of pressure there. But soybeans, if you look at the technicals, Oliver, they have a lot more room to give to the downside, don't they?
That's my big concern, is that we broke below the 200-day. That had acted as support here recently. And again, $13 is kind of the next target if we can't get back out above the 200-day moving average at 1330. And the funds are still holding a decent-sized net long position, 73,000 contracts. They've been trimming that here recently, but they've got obviously more room to trim. But as mentioned from the start of this segment, harvest is going to be a big catalyst here going forward, and see what those yields actually come out like. And then the demand side, we really need to see pick up to see this add some support. We did see a flash sale this morning to about 4.5 million bushels to China, but we're going to need to see more frequent numbers and bigger numbers to really stabilize these grain markets.
Well, we'll turn our attention to the wheat. And, I can't remember the last time that we had a wheat sale announced overnight. I mean, it has been a long time. You'd have to look at that with a multi-year calendar. Let's take a look at what Chicago wheat is doing right now. We have the December wheat there down 13 1/4 at 591. It's like relentless in this slide here. In Kansas City wheat, December going down, yikes, 21 cents at 725.5, almost on the low of the day, and now we're almost 20 cents off of our overnight high. In Minneapolis wheat right now, December is down 12 at 777 per bushel. That's off of its overnight high by 9 cents. And then you finally get to the cotton, and that's where we were higher on the open, still up 100 points on December at 87.44 per pound. Well, what do you think here, Oliver? Is the economy in general going to be supportive to any of the ag commodities here? If we take a look at the Dow, I mean, it wasn't doing much earlier this morning. I just want to get your take on the future toward the end of the year here.
Well, that's the million-dollar question, is the outside markets and the economy. We've got a Fed meeting here this week. What we're keeping a close eye on is the oil market. And the oil market has just been climbing higher and higher and higher, out above that $90 handle. I think we're up another buck this morning. And to me, higher energy prices have a high correlation with higher prices. And so I wouldn't be surprised to see the Fed kind of continue down this path of higher rates for longer, especially if we start to see this inflation grind higher on the back of higher energy prices.
All right. Well, Oliver, thank you so much. I appreciate that. We'll come back in just a moment. We'll go ahead and take a look at what's going on in our cattle and hog markets right after this.